Based on the historical data and forecast, Bitcoin shows a volatile trend with periods of both upward and downward movement. The RSI consistently stays below 80, indicating that the asset is not currently overbought. However, it frequently dips below 40, suggesting potential oversold conditions. The Bollinger Bands have been widening, indicating increased volatility. Given the forecast price decreasing to 81,800, I recommend a contrarian strategy focusing on capitalizing on temporary dips. Specifically, when the RSI falls below 20, enter a long position at 81,800 plus $100. Place a stop-loss order at 81,000 to limit potential losses and set a target price of 86,000 to secure profits during a potential rebound. To further refine the strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential buying opportunity. Therefore, when the RSI is below 20 and the price is near the lower Bollinger Band, enter a long position at 81,800 plus $100. The stop-loss remains at 81,000 and the target price is set at 86,000. This combined strategy leverages both RSI and Bollinger Bands to identify optimal entry points and manage risk effectively, aiming for high returns by capitalizing on short-term price fluctuations. Based on the historical data and forecast, Bitcoin Cash shows a downtrend with consistent support at $280. The RSI values have been fluctuating between 36.4 and 49.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Given the forecast data predicting a continued decline, I propose a short-selling strategy. Entry price will be $298, with a stop-loss at $308 to limit potential losses if the price unexpectedly reverses. The initial target price will be $280, aligning with the established support level. To refine this strategy, I will incorporate the RSI and Bollinger Band signals. When the RSI falls below 20, oversold, we will consider covering our short position. Conversely, when the price touches the lower Bollinger Band, it might be a good time to enter a short position. If the price reaches the upper Bollinger Band, we will consider covering our short position. Therefore, a refined strategy is to enter a short position at $298, with a stop-loss at $308. If the RSI reaches 20, cover the position at $280. If the price touches the lower Bollinger Band, enter a short position at $298. If the price reaches the upper Bollinger Band, cover the position at $280. This combined approach balances the downtrend analysis with short-term volatility signals, optimizing for high returns while managing risk effectively. Based on the historical data and forecast, STRK shows a downtrend with increasing volatility. The RSI consistently fluctuates below the 50 mark, indicating a prevailing bearish sentiment. The forecast predicts further decline, reinforcing the bearish outlook. Considering the support price of $0.541 and the current price hovering around $0.606, a short position is warranted. The entry price for this short position will be $0.606. To mitigate potential losses, a stop loss will be set at $0.621, just above the resistance level. The target price for this short position is $0.573, aligning with the lower band of the Bollinger Bands and the forecast price. To further refine this strategy, we will incorporate the Bollinger Bands. When the price approaches the upper band, it signals a potential shorting opportunity. Conversely, when the price touches the lower band, it suggests a potential buying opportunity. Combining the RSI and Bollinger Bands, we will implement a portfolio with 60% short position and 40% long position. The short position will be executed at $0.606 with a stop loss at $0.621 and a target of $0.573. The long position will be initiated at $0.573 with a stop loss at $0.58 and a target of $0.598. This blended approach aims to capitalize on both the prevailing downtrend and potential short-term rebounds, optimizing risk-adjusted returns. Based on the historical data and forecast, Ethereum has shown a downtrend with recent price fluctuations. The RSI consistently dips below 50, indicating a weak buying pressure and potential for further declines. The forecast data for the next week projects continued downward momentum, with prices hovering around $1,760 to $1,780. Considering the support price of $1,760 and the RSI readings, a short position is recommended. We will enter a short position at $1,810, placing a stop-loss order at $1,770 to limit potential losses. The initial target price will be $1,760, aligning with the established support level. To refine the strategy, we'll incorporate the Bollinger Bands. The price is currently below the moving average and the bands are contracting, suggesting a potential for a volatile move. If the price breaks below the lower Bollinger Band, it would confirm the downward trend. We will adjust the target price to $1,750 if the price hits $1,760 first. This combined RSI and Bollinger Band strategy aims to capitalize on the prevailing downtrend while managing risk effectively. Based on the historical data and forecast, XRP shows a downtrend, particularly evident in the recent forecast prices. The RSI consistently dipped below 50, reaching as low as 36.5, indicating oversold conditions. The Bollinger Bands also suggest a contraction, which often precedes a breakout. Given this, I propose a contrarian strategy focusing on potential rebounds. We will initiate a long position when the RSI reaches an oversold level of 37.0 or below. The entry price will be $2.02. To manage risk, the stop loss will be set just below the lower Bollinger Band, at $1.95. The initial target price will be the center of the Bollinger Bands, at $2.31. To refine the strategy, we will implement a trailing stop loss once the price reaches the $2.31 target. This trailing stop will be positioned at the lower Bollinger Band, adjusting dynamically as the price moves higher. If the price retraces and touches the stop loss at $1.95, we exit the position. We can consider a secondary target price at the resistance level of $2.15, but this will depend on the strength of the rebound and overall market conditions. This combined approach, utilizing RSI, Bollinger Bands, and support/resistance levels, aims to capitalize on potential short-term gains while mitigating downside risk. Based on the historical data and forecast, Binance Coin shows a downtrend with a decreasing RSI and a consistent forecast below the recent prices. The support price is stable at $555, while the resistance is at $598. Given the current RSI around 43.2, which is oversold, combined with the forecast indicating further decline, I recommend a contrarian strategy. We will initiate a long position at $588, placing a stop loss at $555 to protect against further downside risk. The initial target price will be $636, aiming to capitalize on a potential short-term bounce. If the price reaches $636, we will consider moving the stop loss to break even to secure profits and potentially extend the target price to $666 if the uptrend continues. However, the Bollinger Band suggests caution. The price is currently near the lower band, indicating potential for a bounce, but the forecast consistently predicts lower prices. Therefore, we should implement a conservative approach. If the price breaks below the lower Bollinger Band of $572, we should immediately close the position and reevaluate the trend. The overall portfolio will allocate 60% to the long position at $588 with the aforementioned stop loss and target prices, 20% to a short position at $600 with a stop loss at $636 and a target price of $555, and 20% in cash to manage risk and allow for opportunistic entry later. This blended strategy aims to maximize returns while mitigating potential losses in a volatile market. Based on the historical data and forecast, Stellar has been showing a downtrend recently, with the forecast indicating further decline in the coming week. The RSI values have been fluctuating below 50, indicating a weakening momentum. The Bollinger Bands are narrowing, suggesting a period of consolidation before a potential breakout. Considering these factors, I recommend a short position strategy with a focus on capitalizing on the downward trend. The entry price for this short position should be $0.266, aligning with the initial forecast price. A stop loss should be set at $0.256, slightly above the forecast high and the upper Bollinger Band to protect against unexpected price reversals. The target price is set at $0.242, coinciding with the established support level, providing a clear profit objective. To refine this strategy, we can incorporate RSI signals. When the RSI falls below 20, indicating an oversold condition, we should consider covering the short position or reducing the position size. Conversely, when the RSI rises above 80, suggesting an overbought condition, we should consider adding to the short position. The portfolio will primarily consist of the short position strategy, with adjustments based on RSI signals to optimize returns and manage risk. This combined approach, utilizing both trend analysis and momentum indicators, aims to achieve high returns while mitigating potential losses. Based on the historical data and forecast, Doge-Coin shows an upward trend, consistently bouncing off the support price of $3.71. The RSI fluctuates between 54.8 and 66.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. Considering the forecast data, the price is expected to continue its upward trajectory, reaching $4.14. Therefore, I recommend a long position strategy. Entry price should be $3.94, with a stop loss placed just below the support level at $3.68. The initial target price is $4.11, aligning with the previous resistance. To refine the strategy, we can incorporate RSI and Bollinger Band signals. When the RSI falls below 30, it signals an oversold condition, presenting a buying opportunity. Conversely, when the RSI exceeds 70, it suggests an overbought condition, prompting a potential exit. Additionally, a breakout above the upper Bollinger Band signals further upward momentum, while a breach of the lower band indicates a potential downward correction. Combining these signals, if the RSI drops below 30 and the price is near the support level of $3.71, enter a long position at $3.71 with a stop loss at $3.68 and a target price of $4.14. This combined strategy leverages multiple indicators to enhance risk management and maximize potential returns. Based on the historical data and forecast, Cardano exhibits a downtrend. The price has been fluctuating within a range bounded by a support price of $0.358 and a resistance price of $0.673. The RSI indicates oversold conditions, fluctuating between 39.3 and 49.6. The Bollinger Bands show a narrowing trend, suggesting potential volatility. Given the forecast for the next week, which predicts a continued decline, I recommend a short position. Entry price should be $0.671, with a stop loss placed at $0.672 to mitigate potential losses if the price rebounds. The target price should be $0.648, based on the forecast. To refine this strategy, we can incorporate RSI and Bollinger Band signals. When the RSI falls below 20, oversold, consider a long position. When the RSI exceeds 80, overbought, consider a short position. If the price touches the lower Bollinger Band, consider a long position, and if the price touches the upper Bollinger Band, consider a short position. Combining these indicators, the most efficient portfolio would be to short at $0.671, set a stop loss at $0.672, and target $0.648. This strategy leverages the predicted downtrend and incorporates risk management through a defined stop loss. Based on the historical data and forecast, Litecoin demonstrates a clear downtrend. The price has been declining over the past 2 weeks, and the forecast for the next week projects further decreases. The support price of $73.7 provides a potential floor, while the resistance of $91.3 has repeatedly been tested without sustained breakouts. The RSI consistently fluctuates below the 50 mark, indicating a prevailing bearish sentiment. Considering the forecast and the RSI readings, I recommend a short selling strategy. We will enter a short position at $82.2, placing a stop-loss order at $86.3 to protect against unexpected upward movements. The initial target price is set at $75.7, aiming to capitalize on the anticipated downward trend. To refine the strategy, we will incorporate the Bollinger Bands. The price has been trending toward the lower band, confirming the bearish outlook. If the price breaks below the bottom of the Bollinger Bands, $82.1, we will lower the stop loss to $80 and adjust the target price to $75.7. This dynamic adjustment allows us to capture more profit as the downtrend continues. The RSI readings consistently below 30 suggest that the asset is oversold and poised for a further decline. Therefore, this combined approach of short selling, stop-loss adjustments, and target price modifications should yield high returns while managing risk effectively. Based on the historical data and forecast, Doge-Coin shows a fluctuating trend with recent consolidation. The RSI values hover around the mid-range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing, suggesting decreasing volatility. Considering the support price of $2.27 and the forecast for the next week, I recommend a long position strategy. We will enter a long position at $2.3, placing a stop-loss order at $2.27 to limit potential losses. The target price will be set at $2.6, aiming for a reasonable profit. To enhance the strategy, we will incorporate the Bollinger Bands and RSI indicators. If the price touches the lower band of $2.27, which aligns with the support level, we will enter a long position at $2.3. The stop loss will be set just below the lower band at $2.27. If the RSI falls below 20, indicating an oversold condition, we will also consider entering a long position at $2.3. The target price will be set at $2.6, which is above the upper Bollinger Band, providing a buffer for potential price corrections. This combined strategy seeks to capitalize on potential upward movements while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, APTUS shows a downtrend with a recent price consolidation. The RSI consistently fluctuates below 50, indicating a weakening momentum, and the forecast suggests continued downward pressure. Considering the support price of $5.06 and the current price around $5.09, a short position is warranted. We will implement a short strategy with an entry price of $5.09. The stop loss will be set slightly above the recent high of $5.16 to protect against a potential bounce, setting the stop loss at $5.16. The initial target price will be the support level of $5.06, aiming for a quick profit. To refine the strategy, we'll incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential for a further decline. We will add a second target price at $4.94, the lower Bollinger Band from March 20, 2025. This combined strategy, using RSI and Bollinger Bands, offers a balance between risk management and potential reward. The overall portfolio will consist of a short position with an entry price of $5.09, a stop loss at $5.16, and two target prices at $5.06 and $4.94. This approach aims to capitalize on the current downtrend while minimizing potential losses. Based on the historical data and forecast, SE has been exhibiting a downward trend. The price has been fluctuating within a defined range between a support price of $0.142 and a resistance price of $0.164. The RSI values have consistently remained below the 50 mark, indicating a prevailing bearish sentiment. Furthermore, the forecast data for the next week projects a continuous decline, with prices potentially reaching as low as $0.155. Considering these factors, I recommend a short selling strategy with an entry price of $0.173 on April 3, 2025. A stop loss should be set at $0.178 to protect against unexpected upward movements, and the initial target price should be $0.164, aligning with the resistance level. To refine the strategy, we can incorporate the Bollinger Bands. The price is currently near the bottom band, suggesting potential for a brief bounce. However, the overall downward trend and bearish indicators outweigh this possibility. Therefore, after reaching the initial target price of $0.164, we can consider a secondary target price of $0.155 based on the forecast data. The RSI is currently in the oversold territory, which may lead to a temporary rebound. However, given the overall bearish trend, the secondary target price of $0.155 remains a reasonable expectation. This combined strategy offers a balanced approach, capitalizing on the downward trend while incorporating risk management and potential for incremental gains. Based on the historical data and forecast, Ethereum Classic has been in a downtrend, with the price declining from $18.4 to $16.1. The forecast for the next week indicates a continued downward trend, potentially reaching $15.9. Considering the RSI values, which have mostly been below 50 and recently dipped below 40, the asset is approaching oversold territory. The Bollinger Bands show that the price is currently trading near the lower band, suggesting further potential for a decline. Therefore, I recommend a short selling strategy. The entry price for this strategy should be $16.3, coinciding with the recent forecast price and a lower Bollinger Band. A stop-loss order should be placed at $16.8, just above the recent high and the upper Bollinger Band, to limit potential losses if the price unexpectedly rises. The target price should be $15.9, aligning with the forecast price for the week and providing a reasonable profit margin. This short-selling strategy leverages the observed downtrend and technical indicators to capitalize on potential price declines, while the stop-loss order protects against adverse market movements. Based on the historical data and forecast, Polygon shows a downtrend, especially with the forecast prices decreasing from $0.195 to $0.178. The RSI consistently hovers below 50, indicating a prevailing bearish sentiment. The Bollinger Bands are narrowing, suggesting decreasing volatility and a potential for a breakout. Given this analysis, I recommend a short position strategy. Entry price should be $0.195. The stop-loss price will be set at $0.205 to protect against a potential upward reversal. The target price will be $0.178, aligning with the lowest forecast price. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 30, consider entering a short position at $0.195, placing a stop-loss at $0.205, and setting a target price of $0.178. If the price touches the top of the Bollinger Bands, it signals a potential shorting opportunity at $0.195, with a stop-loss at $0.205 and a target price of $0.178. This combined approach leverages both momentum and volatility indicators for a more robust and high-return investment strategy. Based on the historical data and forecast, AEVO exhibits a downtrend with significant volatility. The RSI consistently dipped below 50, reaching a low of 30.5, indicating oversold conditions. The forecast predicts further decline, with prices projected to reach 0.092. Considering these factors, I recommend a contrarian strategy focused on short-term gains. We will initiate a long position when the RSI reaches an oversold level of 20, specifically at $0.092. The stop-loss will be set just below the recent low of $0.0977 at $0.095 to protect against further downside. Our target price will be $0.12, aiming to capitalize on a potential bounce from the oversold condition and a reversion towards the mean. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, it reinforces the oversold signal. Given the forecast and the Bollinger Bands, the entry price will be $0.092. The stop-loss will remain at $0.095, and the target price will be $0.12. This combined RSI and Bollinger Bands approach offers a higher probability of success by confirming signals and managing risk effectively. This strategy aims for a quick profit by exploiting short-term price fluctuations in a volatile market. Based on the historical data and forecast, optimism shows a downtrend, with the forecast indicating a continued decline. The RSI consistently remains below 80, suggesting the asset is not overbought, but also fluctuating around 40, indicating a neutral to slightly bearish sentiment. The Bollinger Bands are narrowing, which typically precedes a significant price movement. Considering these factors, I recommend a short position strategy. The entry price should be $0.735, coinciding with the initial forecast price. A stop loss should be set at $0.766, just above the recent high and the top of the Bollinger Bands, to limit potential losses if the price unexpectedly reverses. The target price should be $0.651, aligning with the lowest forecast price. To refine this strategy, we can incorporate RSI signals. When the RSI dips below 33, it indicates an oversold condition, which could be a potential entry point for a long position. However, given the overall downtrend, I maintain a short position. We can also use the Bollinger Bands to confirm the trend. If the price breaks below the lower band, it strengthens the bearish signal. Therefore, the portfolio will be 70% short position with an entry price of $0.735, a stop loss of $0.766, and a target of $0.651, and 30% waiting for the RSI signal to enter the market. This diversified approach balances risk and potential reward, capitalizing on the anticipated downward trend while remaining flexible to adapt to changing market conditions. Based on the historical data and forecast, STRK shows a declining trend. The recent RSI values consistently below 50, with several days below 30, indicate an oversold condition. The forecast predicts further price decline, with prices ranging from $0.144 to $0.128. The Bollinger Bands are narrowing, suggesting decreasing volatility. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. My strategy involves entering a long position at $0.13 when the forecast price reaches this level. Given the oversold RSI and potential for a short-term bounce, this entry price aims to capitalize on a possible temporary upward movement. The stop loss will be set at $0.128, just below the forecast low, to limit potential losses if the downward trend continues. The target price will be $0.15, representing a potential profit of $0.02. This strategy prioritizes a quick profit within a short time frame, acknowledging the overall bearish sentiment. Based on the historical data and forecast, Solana exhibits a downtrend, with the forecast indicating a continued decline to $115. The RSI consistently fluctuates around the 40 to 50 range, suggesting neutral to slightly bearish momentum. The Bollinger Bands show the price approaching the lower band, indicating a potential oversold condition. Given this analysis, I recommend a short-term short position. Entry price should be $117, with a stop loss set at $124 to protect against a potential rebound. A target price of $115 is suggested, aiming to capitalize on the anticipated downward trend. To enhance the strategy, we can incorporate RSI and Bollinger Band signals. When the RSI dips below 37 and the price touches the lower Bollinger Band, it's a strong indication of an oversold condition, reinforcing the short position. Conversely, if the RSI rises above 50 and the price approaches the upper Bollinger Band, it signals a potential reversal, prompting a close of the short position. Therefore, the entry price remains $117, the stop loss remains $124, and the target price is $115. This combined strategy leverages multiple technical indicators for a more robust and potentially profitable trading decision. Based on the historical data and forecast, Jupiter is exhibiting a downtrend. The RSI consistently remains below 50, frequently dipping into oversold territory, indicating weakening buying pressure. The forecast for the next week projects a continued decline, with prices falling from 0.423 to 0.332. The Bollinger Bands also suggest a downward trajectory, with the price consistently trading near the lower band. Therefore, a short selling strategy is recommended. We will implement a three-tiered position strategy. First, initiate a short position at $0.423 with a stop loss at $0.435. If the price breaks above this level, it signals a potential trend reversal. The initial target price is $0.378, based on the recent historical low. If the price continues to decline, a second short position can be opened at $0.393 with a stop loss at $0.404 and a target price of $0.357. Finally, a third short position can be opened at $0.381 with a stop loss at $0.393 and a target price of $0.344. These successive entry points capitalize on the expected downward momentum while mitigating risk with strategically placed stop-loss orders. Based on the historical data and forecast, Render shows a fluctuating trend with recent consolidation around $3.4 to $3.7. The RSI indicator fluctuates between 43.8 and 59.6, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering these factors, I propose a moderately bullish strategy. We will enter a long position when the price touches the support level of $3.11. The stop loss will be set at $3.01 to limit potential losses. The initial target price will be $3.7, coinciding with the recent resistance level. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI falls below 20 near the $3.11 support level, we will hold off on the entry, anticipating a potential bounce. If the price touches the bottom of the Bollinger Bands near $3.11, we will enter a long position at $3.11 with a stop loss at $3.01. The first target will be $3.5, and if the price reaches this level, we will move the stop loss to the entry price of $3.11. The second target will be $3.7. If the RSI reaches 80 near the $3.7 resistance level, we will take profits and consider a short position. This blended approach combines trend analysis, support and resistance levels, and technical indicators for optimal risk-reward management. Based on the historical data and forecast, Solana name service shows a declining trend. The RSI consistently dipped below 50, with recent values below 35, indicating oversold conditions. The Bollinger Bands have been contracting, suggesting decreasing volatility, and the forecast predicts further price declines. Given this bearish outlook, I recommend a short position strategy. Specifically, enter a short position at $0.0909. Set a stop loss slightly above the upper Bollinger Band at $0.0994 to protect against unexpected upward movements. The initial target price is $0.0781, aligning with the lowest forecast price. To refine the strategy, we can incorporate the RSI. If the RSI rises above 50 during the trade, consider adjusting the target price to $0.0856. Conversely, if the price touches the lower Bollinger Band, which is $0.0889, move the stop loss to break even at $0.0909. This adaptive approach allows us to capitalize on the anticipated downtrend while mitigating potential losses and maximizing profits based on real-time market dynamics. This combined strategy, utilizing both Bollinger Bands and RSI, offers a robust and adaptable approach to trading Solana name service. Based on the historical data and forecast, Doge-Coin shows a slight upward trend, but with considerable volatility. The RSI consistently fluctuates around 40, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. The support level is consistently at $0.155, while the resistance is around $0.167. Considering these factors, I recommend a moderately bullish strategy focusing on capitalizing on short-term price swings. We will implement a strategy based on the Bollinger Bands, aiming to buy when the price touches the lower band and sell when it reaches the middle band. The entry price will be $0.163, coinciding with the forecast price and the lower Bollinger Band. The stop loss will be set slightly below the support level at $0.154 to protect against a potential downward break. The target price will be $0.175, aligning with the middle of the Bollinger Bands. This strategy aims for a quick profit within a narrow range, taking advantage of the anticipated bounce from the lower band. This approach balances risk and reward, capitalizing on the short-term momentum while mitigating potential losses with a well-defined stop loss. Based on the historical data and forecast, PEPE has been trading within a relatively tight range, fluctuating between a support price of $70.06 and a resistance price of $0.00000710. The RSI values have remained mostly within the neutral zone, indicating a lack of strong directional momentum. The Bollinger Bands have been narrowing, suggesting a period of consolidation, and the forecast predicts a continued downward trend towards $0.00000710. Considering this, I propose a cautious strategy focused on short-term opportunities. My recommended strategy is to initiate a long position when the RSI dips below 45, indicating an oversold condition. Specifically, enter a long position at $0.00000710. Place a stop-loss order just below the support level at $0.00000690 to limit potential losses. Set a target price at the resistance level of $0.00000730, aiming for a modest profit. This strategy combines RSI signals with support and resistance levels to capitalize on short-term bounces within the current consolidation range. Based on the historical data and forecast, SHIB exhibits a slight downward trend. The price has been fluctuating within a range bounded by a support of $0.000115 and a resistance of $0.000125. The RSI values have mostly remained below 50, indicating a generally neutral to slightly bearish momentum. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation before a potential breakout. Considering these factors, I recommend a cautious strategy focusing on short-term opportunities. My proposed strategy is a combination of RSI and Bollinger Bands. We will initiate a short position when the RSI reaches above 70 and the price touches the upper Bollinger Band. The entry price will be $0.00000141. The stop loss will be set just above the upper Bollinger Band at $0.00000142 to protect against a potential false breakout. The target price will be the support level of $0.00000115, aiming to capitalize on the anticipated downward trend. This strategy combines technical indicators to minimize risk and maximize potential profit. Based on the historical data and forecast, Dog with Hat shows a downtrend. The RSI consistently remained below 50, dipping as low as 31.6, indicating a prevailing bearish sentiment. The Bollinger Bands also suggest a contraction, followed by a widening, which often signals increased volatility and potential price swings. Considering the forecast prices, which continue to decline, a short position appears warranted. We will implement a strategy that combines RSI and Bollinger Band signals. Our strategy involves a short entry at $0.375. The stop loss will be set just above the upper Bollinger Band of $0.39, providing a buffer against short-term volatility. The initial target price is set at $0.364, aligning with the forecast price for April 9, 2025. If the price action favors further decline, we will adjust the target price to $0.35. This approach combines technical indicators to manage risk and capitalize on the anticipated downward trend of Dog with Hat. Based on the historical data and forecast, Doge-Coin shows a downtrend. The RSI consistently fluctuates below 50, with readings dipping as low as 36.7, indicating a bearish sentiment. The forecast for the next week projects further decline, with prices decreasing from $0.00226 to $0.00204. Bollinger Bands also support this view, as the price has been trending towards the lower band. Therefore, a short selling strategy is recommended. We will initiate a short position at $0.00226. The stop loss will be set at $0.00236, just above the upper Bollinger Band, to limit potential losses if the price unexpectedly rebounds. The initial target price will be $0.00209, aligning with the lowest point in the recent historical data. To refine the strategy, we will incorporate a dynamic adjustment based on the RSI. If the RSI rises above 50 during the trade, indicating a potential trend reversal, we will adjust the target price to $0.00215 and consider closing the position to secure profits. Conversely, if the RSI falls below 30, signaling an oversold condition, we will maintain the stop loss at $0.00236 and wait for a potential bounce. This adaptive approach will help maximize returns while managing risk effectively. The portfolio will be 100% short Doge-Coin. Based on the historical data and forecast, Near Protocol shows a downtrend with increased volatility. The price has been fluctuating between the support price of $2.29 and a resistance price of $2.73. The RSI indicates periods of oversold and overbought conditions, with recent readings trending towards oversold. The Bollinger Bands have been widening, suggesting increased volatility and potential for price swings. Considering these factors, I recommend a contrarian strategy focusing on short-term opportunities. My strategy involves a combination of RSI and Bollinger Band signals. When the RSI falls below 20, indicating an oversold condition, initiate a long position at $2.42. Set a stop-loss order at $2.37, just below the lower Bollinger Band, to limit potential losses. Place a target price at $2.73, near the resistance level, to capitalize on a potential bounce. If the price hits the resistance, consider taking profits and waiting for the next opportunity. This strategy aims to capture short-term gains during periods of volatility, with risk management through stop-loss orders. Based on the historical data and forecast, Internet Computer shows a declining trend. The price has been fluctuating within a range, with support at $4.72 and resistance at $5.61. The forecast for the next week indicates a continued downward trajectory, with prices ranging from $5.25 to $4.85. Considering the RSI values, which have been generally below 80, indicating not overbought, and often dipping below 40, suggesting oversold conditions, we can implement a combined strategy leveraging RSI and Bollinger Bands. We will focus on capitalizing on short-term dips and potential rebounds. Our strategy involves a combination of RSI and Bollinger Band signals. When the RSI falls below 35, indicating an oversold condition, we will enter a long position at $5.25. The stop loss will be set just below the lower Bollinger Band at $5.07 to limit potential losses. The initial target price will be the resistance level at $5.61. If the price reaches $5.61, we will move the stop loss to the entry price of $5.25 to secure profits and protect against a potential reversal. If the RSI rises above 60, indicating an overbought condition, we will enter a short position at $4.92, with a stop loss at $4.96 and a target price at $4.72. This portfolio prioritizes capitalizing on short-term price fluctuations within the defined range, managing risk through strategic stop-loss placement, and aiming for incremental gains. Based on the historical data and forecast, Injective shows a downtrend, particularly evident in the recent forecast prices, which are consistently decreasing. The RSI values have been fluctuating between 33.9 and 46.9, indicating periods of oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility. Considering these factors, a short selling strategy is recommended. We will initiate a short position at $8.6, placing a stop-loss order at $8.8 to protect against unexpected price surges. The initial target price will be $7.8, aiming to capitalize on the anticipated downtrend. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI falls below 30, indicating an oversold condition, we will consider adding to the short position at $8.32. Conversely, if the price touches the lower Bollinger Band, which is currently at $7.81, it suggests a potential bounce. In this scenario, we will tighten the stop loss to $7.9. If the price breaks above the upper Bollinger Band, indicating a potential reversal, we will close the entire position and reevaluate the market conditions. The final target price will be $7.89, aligning with the latest forecast price. This portfolio combines short selling with RSI and Bollinger Band signals for enhanced risk management and potential profit maximization. Based on the historical data and forecast, BTC demonstrates a declining trend, particularly evident in the recent forecast prices. The RSI consistently hovers around the 35 to 47 range, indicating neither overbought nor oversold conditions. However, the forecast data suggests a continued downward trajectory, potentially reaching $195. Therefore, I recommend a short selling strategy. Entry price will be $218, with a stop loss placed at $224 to mitigate potential losses if the price rebounds unexpectedly. The target price will be $195, aiming to capitalize on the anticipated downward trend. To refine this strategy, we will incorporate the Bollinger Bands. The price is currently below the moving average and approaching the lower band, suggesting a potential for further decline. The combined strategy will prioritize the short selling position with an entry price of $210, a stop loss at $227, and a target price of $197. This portfolio combines the insights from both the RSI and Bollinger Bands, creating a robust approach to capitalize on the projected downward movement of BTC. Based on the historical data and forecast, THETA network has shown a downtrend recently, with the price fluctuating between a support of $0.769 and a resistance of $0.815. The RSI indicates oversold conditions with values consistently below 40, suggesting a potential bounce. However, the forecast data for the next week projects a continued downward movement, with prices potentially reaching $0.73. Considering the Bollinger Bands, the price has been approaching the lower band, which could signal a temporary bottom. Therefore, I recommend a contrarian strategy, anticipating a short-term bounce before the overall downtrend resumes. My strategy involves a long position entry at $0.776, capitalizing on the oversold RSI and the proximity to the lower Bollinger Band. The stop loss will be set at $0.743, just below the forecast low for April 3, 2025, to limit potential losses if the downtrend continues. The target price will be $0.815, aligning with the recent resistance level. This provides a reasonable profit margin while acknowledging the prevailing downward trend. This strategy aims for a quick profit from a short-term rebound, with a tight stop loss to manage risk effectively. Based on the historical data and forecast, WorldCoin exhibits a downtrend, particularly evident in the recent forecast prices hovering around $0.72. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The Bollinger Bands show the price testing the lower band, further confirming the downward trajectory. Therefore, I recommend a short position strategy. Entry price should be $0.721. Considering the recent downtrend and the forecast, a conservative stop loss should be set at $0.75, just above the lower Bollinger Band. A reasonable target price, anticipating further decline, is $0.718, aligning with the forecast price on April 9, 2025. To optimize the portfolio, I suggest a hybrid approach combining RSI and Bollinger Band signals. The initial entry at $0.721 is triggered by the RSI being below 50 and the price nearing the lower Bollinger Band. If the price rebounds and touches $0.75, the stop loss is triggered, limiting potential losses. Conversely, if the price declines to $0.718, the target price is achieved, securing a profit. This strategy balances risk and reward, capitalizing on the predicted downtrend while incorporating technical indicators for confirmation and risk management. Based on the historical data and forecast, Hooked Protocol shows a downtrend. The RSI consistently stays below 50, indicating a bearish momentum, particularly dropping to 31.7 on April 2, 2025, signaling an oversold condition. The forecast data for the next week predicts a continued decline, with prices falling from 0.121 to 0.102. Considering the downtrend and oversold RSI, I recommend a short position. Enter a short position at $0.121 with a stop loss at $0.127 to protect against a potential rebound. The initial target price is $0.107, aligning with the lowest forecast price. To refine this strategy, we'll incorporate Bollinger Bands. The price has been consistently below the upper band, reinforcing the downtrend. If the price approaches the lower band, it could indicate a potential bounce. Therefore, after reaching the initial target of $0.107, we will reevaluate. If the RSI moves towards 30, consider taking partial profits at $0.113 and setting a trailing stop loss just above the lower Bollinger Band to capture further downside potential. This layered approach balances risk and reward, capitalizing on the prevailing bearish trend while adapting to market fluctuations. Based on the historical data and forecast, Artificial Superintelligence Alliance has shown a downtrend with significant volatility. The price has been fluctuating between the support of $0.391 and a resistance of $0.51. The RSI has mostly been below 50, indicating a weakening momentum, and the forecast suggests a continued downward trend with prices ranging from $0.401 to $0.451. Considering these factors, I recommend a short selling strategy with a focus on capitalizing on the anticipated downward movement. We will enter a short position at $0.451, placing a stop-loss order at $0.462 to limit potential losses if the price unexpectedly rises. The initial target price will be $0.401, aiming to capture a quick profit from the predicted decline. To refine the strategy, we will incorporate the Bollinger Bands. When the price touches the upper band, it suggests an overbought condition, and when it touches the lower band, it suggests an oversold condition. Given the current forecast and the RSI readings, we can consider an additional entry point. If the price reaches $0.433, which is near the upper Bollinger Band, we will enter a short position with a stop loss at $0.449 and a target price of $0.404. This layered approach allows us to manage risk and potentially increase profits by taking advantage of short-term price fluctuations within the broader downtrend. This portfolio combines the RSI and Bollinger Band strategies to achieve the most efficient outcome. Based on the historical data and forecast, Polkadot shows a declining trend. The price has been fluctuating within a range but is trending downwards, particularly evident in the recent forecast prices of 4.11, 4.02, 3.97, 3.96, 3.9, 3.93, $3.94. The RSI values have been consistently below 50, indicating a weakening momentum. Considering the current forecast, I recommend a short position. Entry price will be $4.05, with a stop loss set at $4.16 and a target price of $3.78, near the support level. This strategy leverages the downward trend and aims to capitalize on potential price declines. To refine the strategy, we'll incorporate the Bollinger Bands. The price has been approaching the lower band, which could signal a potential bounce. However, given the overall downtrend, I'll maintain the short position. The entry price remains $4.05, with a stop loss adjusted to $4.16 to account for potential volatility around the lower band. The target price remains $3.78, aligning with the support level. This combined strategy aims to maximize returns by capitalizing on the prevailing downward trend while mitigating risk with a carefully placed stop loss. Based on the historical data and forecast, Filecoin shows a downtrend with increasing selling pressure. The RSI consistently hovers around the 40 to 50 range, indicating indecision but leaning towards bearish momentum. The Bollinger Bands are narrowing, suggesting a potential consolidation period before a breakout. The forecast for the next week predicts a continued decline, with prices potentially reaching $2.69. Considering these factors, I recommend a short selling strategy. Enter a short position at $2.7, placing a stop loss at $2.78 to protect against a potential rebound. The initial target price is $2.69, aligning with the forecast. To maximize potential gains, we'll implement a dynamic target strategy. If the price reaches $2.69, we'll move the stop loss to the entry price of $2.7, securing a risk-free profit. We will then extend the target price to $2.69, capitalizing on the continued downtrend. This strategy combines RSI signals, Bollinger Bands analysis, and forecast data to generate high returns while managing risk effectively. The portfolio will prioritize short positions with tight stop losses and dynamic target adjustments, ensuring optimal performance in the current market conditions. Based on the historical data and forecast, Conflux shows a downtrend with increased volatility. The RSI values fluctuate between 35.6 and 49.9, indicating periods of oversold and overbought conditions. The Bollinger Bands show a narrowing range recently, suggesting a potential breakout. Given the recent price decline and the forecast indicating further downward pressure, I recommend a short selling strategy. We will enter a short position at $0.0802. The stop loss will be set at $0.0833, just above the resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.0766, aligning with the lower Bollinger Band and the forecast price on April 6, 2025. To refine this strategy, we will incorporate RSI signals. If the RSI reaches 80, indicating an overbought condition, we will close the short position and secure profits. Conversely, if the RSI drops below 20, indicating an oversold condition, we will reevaluate the trade and potentially adjust the stop loss or exit the position. The portfolio will prioritize the short selling strategy with a focus on the forecast data and Bollinger Bands, with RSI acting as a secondary confirmation signal. This approach aims to capitalize on the anticipated downward trend while managing risk through strategic stop loss and target prices. Based on the historical data and forecast, Ethereum name service shows a downtrend. The price has been consistently declining from March 20, 2025, to April 9, 2025. The forecast for the next week predicts further decline, with prices ranging from $15.5 to $14.5. The RSI consistently remains below 50, indicating a bearish momentum. The Bollinger Bands also suggest a downward trend, with the price trading near the lower band. Considering these factors, I recommend a short position strategy. We will enter a short position at $15.5. The stop loss will be set at $15.8, just above the recent resistance level. The target price will be $14.5, aligning with the forecast price and the lower Bollinger Band. To maximize returns, I propose a portfolio combining RSI, Bollinger Bands, and support/resistance levels. The primary strategy is a short position based on the overall downtrend. However, we will incorporate RSI signals. If the RSI reaches an oversold level of 34, we will hold the position. If the RSI rises above 50, we will consider exiting the short position. The support level of $13.3 provides a further downside target. This layered approach allows us to capitalize on the prevailing downtrend while mitigating risk and adjusting to potential short-term reversals. The position will be adjusted based on the RSI and Bollinger Bands. Based on the historical data and forecast, Avalanche has shown considerable volatility. The RSI indicates periods of both oversold and overbought conditions, while the Bollinger Bands suggest potential price fluctuations. Considering the recent downward trend in the forecast and the current RSI hovering around 40, a conservative strategy focusing on short-term gains is recommended. We will implement a strategy based on the RSI, Bollinger Bands, and support/resistance levels. The strategy involves a long position entry at $18.8, coinciding with a recent price dip and a potential bounce. A stop loss will be placed slightly below the support level at $16.3, set at $15.8 to mitigate potential losses. The initial target price will be set at the resistance level of $19.4, offering a quick profit. If the price breaks through the resistance, we will adjust the target price to $22.5, aligning with the upper Bollinger Band. This portfolio combines the strengths of all three strategies, aiming for high returns with calculated risk management. Based on the historical data and forecast, BTC shows a downtrend. The RSI consistently hovers below 50, indicating weakening momentum. The forecast data further reinforces this downward trajectory, with prices expected to decline from $0.0227 to $0.021. Considering the support price of $0.0194, the strategy will focus on short positions. We will implement a short position when the RSI reaches 34.2, the entry price will be $0.0215. The stop loss will be set at $0.0226, just above the resistance level, to limit potential losses if the price unexpectedly reverses. The target price is set at $0.0194, near the support level, aiming for a profit of $0.0021. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the bottom of the Bollinger Bands, $0.0217, it suggests a potential bounce, but the overall downtrend favors a short position. Therefore, we will maintain the short position with an adjusted entry price of $0.0213 and a stop loss of $0.0223. The target price remains at $0.0194. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, PENDLE shows an overall upward trend, supported by consistently breaching the resistance price of $3.04 and the forecast predicting continued increases. The RSI fluctuating between 45.7 and 61.4 indicates periods of both oversold and overbought conditions, but generally leaning towards a bullish momentum. The Bollinger Bands suggest that the price has been relatively contained within a range, with recent upward movement nearing the upper band, implying potential for further gains. Therefore, I recommend a long position strategy. Specifically, I suggest entering a long position at $2.93. Given the recent upward trend and the forecast, a conservative stop loss should be set at $2.71, just below the recent support level. For the target price, I aim for $3.3, aligning with the forecast high and providing a substantial return. This strategy combines trend analysis, RSI signals, and Bollinger Bands to maximize potential gains while mitigating risk. The portfolio should be adjusted daily based on the RSI and Bollinger Bands readings to optimize returns. Based on the historical data and forecast, the sandbox demonstrates a downtrend. The RSI consistently fluctuates below 50, with recent values nearing oversold conditions, particularly on April 2, 2025, at 35.5. The Bollinger Bands are narrowing, indicating decreasing volatility, and the forecast prices for the next week are consistently below the recent closing prices. Considering these factors, I recommend a short position. Entry price should be set at $0.268, with a stop loss placed at $0.274 to limit potential losses if the price unexpectedly rebounds. The target price for this short position is $0.253, aiming to capitalize on the predicted downward trend. To refine the strategy, we can incorporate the RSI and Bollinger Bands. If the RSI crosses below 30, it signals an oversold condition, reinforcing the short position. Conversely, if the price touches the bottom of the Bollinger Bands, it suggests a potential bounce, and the stop loss should be adjusted accordingly. This combined approach offers a balanced strategy, capitalizing on the predicted downtrend while mitigating risks through dynamic adjustments based on technical indicators. The portfolio will prioritize the short position with the entry price of $0.268, stop loss of $0.274, and target price of $0.253. Based on the historical data and forecast, Decentraland shows a downtrend, particularly evident in the recent forecast prices. The RSI consistently dips below 50, indicating a weakening momentum, and the bottom of the Bollinger Bands has been tested frequently. Therefore, a short position strategy is recommended. We will initiate a short position at $0.248, anticipating a further decline. To manage risk, a stop loss will be set at $0.257, just above the recent resistance level. The initial target price will be $0.235, aligning with the forecast price and a significant drop from the entry point. To refine the strategy, we will incorporate the RSI and Bollinger Bands. If the RSI falls below $37, signaling an oversold condition, we will maintain the short position, anticipating a potential bounce. Conversely, if the price touches the bottom of the Bollinger Bands at $0.236, we will consider taking partial profits and adjusting the stop loss to break even. If the price reaches $0.235, we will close the entire position, securing a profit. This dynamic approach, combining trend analysis, RSI signals, and Bollinger Bands, aims to maximize returns while mitigating downside risk. Based on the historical data and forecast, ENG coin demonstrates a declining trend. The RSI consistently remains below 50, indicating a bearish momentum. The forecast data further supports this trend, predicting a continuous decrease in price. Considering the RSI, the current value of 30.0 suggests the asset is oversold, potentially signaling a short-term bounce. However, the overall trend remains downward. Therefore, I recommend a short position with an entry price of $0.0704. A stop loss should be placed at $0.0734 to protect against a potential rebound. The target price for this short position is $0.0688, aligning with the forecast data. To refine this strategy, we incorporate the Bollinger Bands. The price is currently near the lower band, reinforcing the oversold condition. However, the bands themselves are narrowing, which can indicate a period of consolidation before a significant move. Given the strong downward trend and the forecast, I suggest a conservative approach. The short position remains at $0.0704, with a stop loss adjusted to $0.0734. The target price remains $0.0688. This portfolio prioritizes the bearish trend identified through RSI and forecast data, while using Bollinger Bands to confirm the oversold condition and manage risk with a carefully placed stop loss. Based on the historical data and forecast, Uniswap shows a downtrend with increased volatility. The RSI consistently remains below 50, indicating a bearish momentum, with several days dipping below 40, signaling oversold conditions. The Bollinger Bands have been widening, suggesting increased price fluctuations. Considering the forecast prices, which continue to decline, I recommend a short selling strategy. We will enter a short position at $6.02. The stop loss will be set at $5.78, just above the upper Bollinger Band to protect against unexpected upward spikes. The initial target price is $5.77, aligning with the forecast price for April 9, 2025. To refine the strategy, we'll incorporate an RSI-based adjustment. If the RSI rises above 60 during the trade, indicating a potential trend reversal, we will close the position and take partial profits at $5.8. Conversely, if the price reaches $5.77 without an RSI signal, we will adjust the target price to $5.74, capitalizing on the continued downward momentum. This combined strategy leverages both the Bollinger Bands for volatility management and the RSI for trend confirmation, aiming for high returns while mitigating risks. Based on the historical data and forecast, Chainlink shows a downtrend. The price has been consistently falling from March 20, 2025, to April 9, 2025, with a forecast indicating further decline. The support price remains steady at $11, while the resistance fluctuates but hasn't been breached recently. The RSI values have mostly been below 60, suggesting a lack of strong bullish momentum. Considering the Bollinger Bands, the price is currently near the lower band, indicating potential for a bounce, but the overall trend remains bearish. I propose a short selling strategy with an entry price at $12.9 on April 9, 2025. A stop loss should be placed at $13.6 to limit potential losses if the price unexpectedly rebounds. The initial target price is $11, aligning with the established support level. To refine the strategy, I'll incorporate RSI signals. When the RSI drops below 20, oversold, it signals a potential bounce. However, given the current downtrend, I will only consider a partial buyback strategy if the RSI reaches 20 and the price is at $12.8. The stop loss for this partial buyback will be $13.1, and the target price will be $13.4. This approach balances the risk of a continued downtrend with the potential for a short-term rebound. The overall portfolio will consist of 80% short positions and 20% partial buyback positions. This strategy aims for high returns by capitalizing on the prevailing downtrend while mitigating risk with a well-defined stop loss and target price. Based on the historical data and forecast, Aave is currently in a downtrend. The price has been consistently declining from March 20, 2025, and the forecast for the next week predicts further drops, reaching as low as $141. The RSI consistently below 50, with a recent dip to 34.9, indicates the asset is oversold. However, the price is near the support level of $137, suggesting a potential bounce. The Bollinger Bands are widening, indicating increasing volatility. I recommend a contrarian strategy, anticipating a short-term bounce from the support level. Therefore, I propose a long position with an entry price of $141. Given the strong downtrend and forecast, a tight stop-loss is crucial. Set the stop-loss at $138 to limit potential losses if the support breaks. The initial target price should be $146, aligning with the middle of the Bollinger Bands and a conservative profit target. If the price reaches $146, consider moving the stop-loss to break even to protect profits and potentially ride further upside momentum. This strategy combines RSI oversold conditions with support level analysis and Bollinger Bands to maximize potential returns while minimizing risk. Based on the historical data and forecast, EOS shows a strong upward trend. The price has been consistently increasing, with the forecast predicting further gains. The RSI indicates that the asset is approaching overbought conditions, but the upward momentum suggests that a temporary pullback followed by a continuation of the trend is likely. The Bollinger Bands have been widening, indicating increased volatility and potential for significant price movements. We will implement a strategy that combines RSI and Bollinger Bands to capitalize on this trend. Our strategy involves a phased entry approach. Initially, we will enter a long position at $0.694, coinciding with the first forecast price. A stop-loss will be set at $0.659, just below the lower Bollinger Band on April 3, 2025, to protect against unexpected downturns. The first target price will be $0.732, aligning with the second forecast price. If the price reaches $0.732, we will move the stop-loss to break even at $0.659. Subsequently, we will set a second target price at $0.827, corresponding to the fifth forecast price. If the price reaches $0.827, we will move the stop-loss to $0.759. Finally, we will set a third target price at $0.869, aligning with the last forecast price. This phased approach allows us to maximize profits while minimizing risk, capitalizing on the predicted upward trend of EOS. Based on the historical data and forecast, Tron shows a slight upward trend with periods of consolidation around the 0.232 support level. The RSI fluctuating between 46.5 and 56.2 indicates that the asset is neither significantly oversold nor overbought. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility, and the forecast suggests a slight downward pressure initially before stabilizing. I propose a long position strategy capitalizing on potential upward movement. We will enter a long position at $0.231, coinciding with the forecast price on April 5, 2025. To manage risk, we will set a stop-loss at $0.228, just below the recent support level and the lower Bollinger Band. Our target price will be $0.243, aligning with the upper Bollinger Band and a reasonable profit margin considering the recent trading range. This strategy combines RSI and Bollinger Bands to identify potential entry and exit points. The RSI reading of 50.7 on April 2, 2025, suggests a neutral position, while the price approaching the lower Bollinger Band signals a potential buying opportunity. This portfolio prioritizes a balance between capitalizing on short-term price movements and managing risk effectively, aiming for a moderate but consistent return.